just got a raise, you are updating your benefits, you see the life insurance option, 1 times your salary, free. 2 times your salary, a few dollars a month. You check the box for 2 times. You feel responsible, you have life insurance. But here is the number that should keep you up at night. The average family needs 10 to 15 times their annual income in life insurance. Not 1 times, not 2 times, 10 to 15 times. That means if you earn $70,000, you need $700,000 to over $1 million in coverage. Your employer gave you $140,000. You are underinsured by over $800,000. Your family would run out of money in less than 2 years. That is not protection. That is a false sense of security. By the end of this video, you will understand exactly why your work life insurance is not enough. The simple 10X rule that financial experts agree on, and how to fix the gap for less than the cost of a pizza per week. I will break down the math of income replacement, the hidden risk of losing your job and your insurance at the same time, and the 3 steps to build a real safety net. If you rely on your employer for life insurance, you are putting your family at risk. This video will show you why and what to do about it. Let me start with the most common misconception. People think that life insurance is about covering the funeral. It is not. It is about replacing your income. If you die, your family loses every dollar you would have earned for the rest of your working life. That is the real loss. A 30-year-old earning $60,000 per year has 35 years of work ahead. That is over $2 million of future income. A $100,000 work policy replaces less than 2 years. Your family would be broke before they finish grieving. Now here is the rule that every financial planner knows, the 10X rule. Multiply your annual income by 10. That is the minimum amount of life insurance you need. If you earn $50,000, you need $500,000. If you earn $100,000, you need $1 million. Why 10 times? Because your family can invest that money and withdraw about 5% per year without touching the principal. 5% of $1 million is $50,000, the same as your income. That gives your family a lifetime of financial security, not just a few years. Add more for a stay-at-home parent, for college costs, or for paying off the mortgage. But wait, you have work life insurance. Let me tell you why that is not enough. Reason 1, the amount is too small. Most employers offer 1 to 3 times your salary. That is a fraction of the 10X rule. If you earn $80,000 and take 3 times, you have $240,000. Your family would get less than 3 years of income replacement. Then the money runs out. Reason 2, you lose it if you lose your job. What happens if you are diagnosed with cancer, then laid off? Your work life insurance ends the day you leave. You cannot buy a new policy because you are now uninsurable. Your family gets nothing. That is a double disaster. Reason 3, it is not portable. Some plans allow you to convert to an individual policy when you leave, but the conversion rates are often much higher than buying a new policy when you are healthy. You are at the mercy of your former employer's plan. Reason 4, the coverage ends when you retire. Most people retire at 65. That is when they have the most savings and the least need for life insurance. But if you retire and then die, your family gets nothing from your work policy. A personal term policy can be timed to last until your financial obligations are gone. So what is the solution? Buy your own term life insurance policy. It is cheap, it is portable, and it stays with you no matter where you work. A healthy 30-year-old non-smoker can get a 20-year term policy for $1 million for about $40 per month. That is less than your cable bill. For that $40, your family gets $1 million if you die. That is real protection. Now let me address the objections. People say, I have savings. My family will be fine. Savings are for emergencies, not for replacing a lifetime of income. Most families have less than 6 months of expenses saved. That is not enough. People say, my spouse works. We have 2 incomes. If one income disappears, can your family survive on the remaining income? For most families, the answer is no. Even if you can, the loss of one income means less for retirement, less for college, less for everything. People say, I have a small work policy. That is better than nothing. It is better than nothing, but it is not enough. It is a false sense of security. You would not use a screen door on a submarine. Do not use a small work policy as your only life insurance. Now let me break down the 10x rule in more detail. 10 times your income is the baseline, but you may need more. Add your mortgage balance. Add expected college costs for each child. Add an extra 10% for inflation. For example, if you earn $70,000, 10 times is $700,000. Add a $200,000 mortgage, that is $900,000. Add 2 children with college costs of $100,000 each, that is $1,100,000. Add final expenses. That is your number. Round up. What about a stay-at-home parent? The 10x rule does not apply because they have no income, but they have economic value. The cost to replace their labor, childcare, housekeeping, transportation is easily $50,000 to $100,000 per year. A $250,000 to $500,000 policy is reasonable. That might cost $15 to $30 per month. Now let me give you a real-world example of the right way. A family in Texas had a working father earning $80,000 per year. His employer offered 2 times his salary, $160,000. He bought an additional $840,000 20-year term policy for $45 per month. His total coverage was $1 million, which is 12.5 times his income. He died of a heart attack at age 48. His family received $1 million tax-free. They paid off the mortgage, put the kids through college, and had money left over for retirement. They did not have to sell the house or change schools. That is the power of the 10x rule. Now let me give you an example of the wrong way. A family in Illinois relied solely on the father's work policy of 2 times his salary, $140,000. He died unexpectedly. His wife received $140,000. The funeral cost $15,000. She had $125,000 left. Their mortgage was $200,000. She could not afford the payments. She sold the house at a bad time. The kids had to change schools. She went back to work full-time, but still struggled. Within 3 years, the money was gone. She wishes every day that her husband had spent the extra $20 a month for a real policy. What about the UK and Canada? In the UK, the same principles apply. A 30-year-old non-smoker can get a 20-year term policy for £250,000 for about £15 per month. Use the 10x rule. In Canada, similar coverage costs about 25 Canadian dollars per month. Do not rely on work coverage. Buy your own. Now here is your action plan. Step 1. Calculate your 10x number. Multiply your annual income by 10. Add your mortgage, your children's college costs, and final expenses. That is your target. Step 2. Subtract any work life insurance you have. That is your gap. Step 3. Get a quote for a 20 or 30-year term policy for the gap amount. Use an online comparison site. The cost will be surprisingly low. Step 4. Buy the policy. It takes 15 minutes. Step 5. Set up automatic payments. Forget about it. Your family is protected. What if you cannot afford the full 10x? Buy what you can. A $500,000 policy is better than nothing. A $250,000 policy is better than $100,000. Do not let perfect be the enemy of good. Buy something, then increase it when you get a raise. Let me also address the question of group life insurance as a supplement. If your work policy is free or very cheap, keep it. It is extra coverage, but do not rely on it as your primary. Think of it as a bonus on top of your own personal policy. One more tip. When you buy your own policy, name your spouse as primary beneficiary and a trust or your children as contingent. Do not name your estate. Keep the policy separate from your work. If you change jobs, your personal policy stays with you. That is peace of mind. Let me recap the key takeaways. Number 1. Work life insurance is typically 1 to 3 times your salary. That is far below the recommended 10 to 15 times. Number 2. The 10X rule says you need life insurance equal to 10 times your annual income to replace your earnings through investment returns. Number 3. Add your mortgage, college costs, and final expenses to your 10X number for a complete calculation. Number 4. Work life insurance ends when you leave your job. If you become uninsurable, your family loses everything. Number 5. A personal term life policy is portable and stays with you for the entire term, regardless of where you work. Number 6. A healthy 30-year-old non-smoker can get a $1 million 20-year term policy for about $40 per month. Number 7. In the UK and Canada, term life is similarly affordable. Use the 10X rule there too. Number 8. The best time to buy your own policy is today. Do not rely on your employer to protect your family. Here is what I want you to do right now. Open a new tab. Go to a life insurance comparison site. Enter your age, health, and desired coverage of 10 times your income. Look at the monthly premium. It will likely be under $50. Then ask yourself if your family is worth $50 a month. If the answer is yes, buy the policy. You can do it in the time it takes to watch this video. If this video helped you understand why work life insurance is not enough, hit the like button. It helps more families avoid a false sense of security. Subscribe and turn on notifications so you do not miss my next video, which is called The One Number That Determines How Much Life Insurance You Really Need. And comment below. How much work life insurance do you have? And have you bought your own policy? Share your story. I read every comment. Thanks for watching. Now go protect your family the right way. See you in the next one.